All right. Good morning, everybody. Good morning. This is Tuesday, June 9th, 2020. And this is the, I'm out of breath. This is the Maximum One Greater Atlanta Powers Ferry sales meeting. So welcome, everybody. And lots of news and information and exciting things to share. So I am going to turn it over to Jane and George to host the meeting. So Jane, George, whatever you guys have planned, turning it over to you.
Okay. Dana, I was just going to share that I have been working with clients that have a house to sell, and then of course they want to buy a larger one out in Paulding County. We've been to Hiram. I'm watching Woodstock and Kennesaw. And believe it or not, a lot of houses come on the market within 2 or 3 days, 4 or 5 maybe. They're under contract. They are under contract. And also I have seen a few foreclosures and quite a few pre-foreclosure / auction. On the market now, but I just wanted to share that with you. So if you're looking for a house and you find it, you better get an offer in on it and get it quick, or it will be gone within 2 or 3 days. But other than that, that's all I was going to share. Other than we have John.Bohannon, John Zupanik, and Doug Dean that will be speaking to us today. Okay. And I think, George, did you want to add anything this morning?
Yeah, I just want to encourage all of our agents on the Zoom call to realize that, I mean, like Jane is saying, the market is very, very hot for whatever reason. And I even emailed Dana if you can share some stats with it from the office, general office, and see what's going on. I don't know if you're ready, but
I'm not quite ready. I'm not on my regular computer, so I'm comprising that as we speak, George.
Okay. But like Jane is saying, that maybe some of you can testify to, the market is really very hot. Like I had a property on the market and it went on the contract in 1 day, and there were about 3 or 4 offers on the property. So that's good news. And maybe when we get to John to share with her what's going on, he might be able to even give us more details what's going on as far as the mortgage market is concerned. But so far from what I'm looking, and I'm a member of a lot of agents online, and I'm seeing what they're talking about. And across the board, it seems like the market is very, very hot. So that's very good encouragement, despite everything that's going on. So that's good news.
I concur. The contract that John.Bohannon and I are working on right now, as far as he's working with the buyers with their loan, and they were out driving around looking for another property, and they stumbled across this agent's sign. He had just put the sign out, and that was on a Friday. He said, it's coming to market on Monday, but you're welcome to show it. I have the lockbox there. And we actually did get our offer in that Sunday prior to that Monday of him putting it in FMLS. Whoa. And we went under contract. So, you've got to be vigilant and speak to your buyers about being vigilant and not sitting on the fence and waiting, because the inventory is not what it used to be. But buyers are still buying and sellers still want to sell. So they need to make their moves, get their bids in, and just work through the due diligence period, because the market is red hot.
Good for you. That's exciting.
That's good. Congratulations.
Let me make a comment on that, because we are hearing that throughout agents from all of the branches. The demand is much higher than the supply right now. So a couple things. Number one, for lead generation, you guys go after listings, go after listings, go after listings. For buyers, remember that a seller may only sell a house to one buyer at a time, but a buyer may make as many offers as they want. So if you have a buyer that's making multiple offers, if you've ever worked with an investor, investors do this all the time, but investors usually buy a lot of the houses they make offers on. If you're working with a resident buyer, you can write offers on them for multiple properties. Just remember two things. One is make sure that buyer is protected to terminate under a due diligence period, and they're going to need additional earnest money for each offer. You cannot put in one pile of earnest money and have that count for multiple offers. Each offer is going to require its own earnest money. And then the other thing is, if you're on the other side of that, if you are a listing agent and you get an offer from a buyer sight unseen, whether that is a resident buyer or an investor buyer, just remember that there is a higher likelihood that that buyer might terminate because they haven't even seen the property. So you listing agents, another strategy for you right now is not only accept a primary contract, but accept a backup contract. Have your sellers negotiate two contracts. One is the primary contract and one using the backup contingency exhibit. But because I'm hearing this from agents from all the branches right now, you guys. So that's awesome. Back to you, George.
No, that's Jane, can we just ask John to just share with us what the market, what's going on?
Hey, everybody. Yes, George, I can do that. Good morning. So yes, I was kind of waiting to hear what everybody was saying because basically I have the same thing to say, which is maybe a little redundant, but it's super exciting. I think in the light of where we all were a month or even 2 months ago, not knowing, if, we'd lose loved ones and have, possibly even, sicknesses ourselves, to be where we are now, just 1 or 2 months later is amazing. So I am like super grateful and super excited about that. And, I'm really, really thankful. And I think a lot of people are feeling a big sense of relief from like just, still might be holding their breath a little bit, but still feeling really relieved, like, wow, this, like, is it really over? So anyway, in the middle of all that, home buying and home selling now is starting to really take off. So we are seeing the early spring market happening now. So we're, maybe 2 months behind schedule. And we're projecting as a company and as an industry, like a really strong summer. Because there's still a lot of people that still want to buy and sell during the school year because, that's when they always do. So we're seeing, refi still really strong, but purchases are really starting to like take over as far as the number of loans that we're working on. So just to give you guys a little kind of a picture of our company, in March, we closed a record number of loans, never closed that many before. As a company, in April, we broke March's record. And then in May, we broke April's record. And then in June, we're going to break May's record. So it's just, it's amazing how busy everybody is with their purchases and their refinances. And it's at all price points. I closed one of the biggest loans I've ever closed about a month ago. And that way upper end executive price range is really hot. I've closed multiple properties in that range. And then every other price range is very hot. So if you can get a listing, like Dana was saying, man, you really need to like be farming your database, calling people, checking in. Like I know George said he was doing last week, just texting people going, hey, how are you doing? Just checking in is really, really a powerful thing to do because people want to be checked on and make sure that, they're okay. So that's just kind of the market overall. We're projecting this same pace to continue for the next 6 months. Who knows, beyond that, but, the economy is doing really, really well. There was the biggest news in the economy is the stock market went up almost 700 points. I don't remember the exact number, but at the end of last week, had a huge rally. Also, on Thursday, the unemployment numbers came out, and they were projecting 7 million new unemployment claims. And what ended up happening was there was 2 million new jobs created and no new unemployment. So that was an actual 9 million jobs increase in our economy. So that was amazing, you guys. Like, that's the biggest miss that there's ever been in the unemployment numbers. And everybody was kind of scratching their head going, how did we miss it so bad? But what's happened is a lot of the people that had lost their jobs are being called back to work. And then employers who were still underemployed before the pandemic are still needing to hire people. And that's not every job sector. The service industry and the restaurant industry are still, kind of getting back on their feet, and especially the personal services. But, even hairstylists are like booming right now because people couldn't get, their haircut during the pandemic. So there's just a really healthy energy that's starting to happen in our economy, and the effect of all the stimulus, the $2 trillion that was poured in really hasn't even had a chance to take effect yet. So we just believe that this is going to be the shortest recession, which a lot of news commentators are starting to say that the shortest recession in history, along with being one of the worst, it's also one of the very shortest. So that's an amazing thing that's happening. And the projection is for the rest of this year for the market to only be down the home buying market to only be down somewhere between 8 to 11% off of last year, which last year was one of the record years. So it's still going to be an amazing year. And the agents that are out there engaging with their databases and engaging with people are going to be the ones that win and sell the most amount of houses. And they're out there for the taking. There's agents that are still not really sure. Well, if you're feeling confident and want to go out there, you can increase your market share by doing that. So that's just kind of a perspective on the overall, housing industry. As far as what's going on with the federal government, is they are actually buying right now more mortgages than they even bought during the housing recession. So that's keeping the interest rates really low. So if you're wondering, well, I'm not sure if my people want to sell their house or not, a really great excuse is to call them and encourage them to refinance their loan. And one thing I talked about last month on the call, and actually had several people take advantage of this, is if anybody has an interest rate of 3.8 or higher, they can convert their loan to a 20-year fixed and save half of the interest on the loan and keep their payments the same, or very, very close to the same. It may be a few dollars more, a few dollars less, but very, very close to the same as their 30-year fixed. And a lot of folks don't know that the 20-year fixed interest rates are literally is half the total interest of a 30. And anybody that has a loan from even a year ago can refinance and save money. So that's a really important thing that you can just use to call people about, because they probably wouldn't expect you to talk to them about interest rates. They're probably going to expect you to ask them about selling their house. And that's an easy way to start a conversation with them, because you're not trying to make money for yourself. You're trying to just call them to save them some money. And let's face it, like, everybody likes saving money. So that will be a really smart thing to do. And you can tell them, hey, the Fed is buying. This is a daily number, you guys. This is mind blowing. Somewhere between $2 billion and $4 billion a day of mortgages. So they're buying it from us, from other banks, and that's keeping the interest rates really low. So I just would encourage you guys to do that. I think your customers would be glad to hear from you. And then also they would be glad to hear about that. So that would be a really, really important thing to do. As far as our company goes, kind of going from big down to smaller perspective, our company, we had a couple of big announcements that are very, very favorable. And it's that we are servicing all of our mortgages now. And the reason why that's important, and the thought that immediately comes to people's head is, phew, thank goodness, I don't want my loan to be sold, because everybody gets a little worried when that happens. And that's a great thing. And if that's the only benefit that happened, would still be a really good benefit. But there's another benefit that I'm starting to see people take advantage of, is because we are not going to sell the loan, then we can modify that loan later in more customizable ways than most other banks would allow somebody to do that. And I'll explain what I mean. I have a situation right now where a guy owns a condo in Vinings and he wants to buy a townhome in Woodstock, and he doesn't want to have to sell his condo first because this townhome he wants to buy won't accept a contingency. So he's going to write a purchase contract to buy that property. And then after he sells his condo, like a month or so later, he's going to put his down payment money down in a bigger amount. He still has to do the minimum required down payment, okay? But he's going to put a much bigger down payment down and get rid of his mortgage insurance whenever he sells his condo. So we can do the down payment in 2 stages is what I'm trying to say. As long as they have to meet the minimum requirement, then we can allow them to put even more down and get rid of the mortgage insurance, and we'll re-amortize the loan, which means we'll start the loan over again at the lower loan amount so that their payment actually goes down when they do the bigger down payment. So when you're in that kind of a pickle with the seller not being able to take a contingency, that's not the end of the line for your borrower anymore, because a lot of times people need to sell in order to buy, and this fixes that problem. As long as they can pinch some money from a 401k or a family member or whatever they can maybe get it, that we would allow them to go ahead and buy the house, carry both houses, and then give their bigger down payment. So that's kind of a neat thing. Seeing a lot of people be excited about that. Also, by us servicing our own loans, we can go down to a 620 credit score on all loan types. So that's a really big deal. A lot of lenders are at a 640 credit score. Some banks are not even doing refinances, I found out. So there's a lot of flexibility that we can offer you guys. And it's because our company is a real estate agent focused company. And we say that very proudly, and we will stand behind that because our two owners, we only have 2 owners, both of them are former realtors, and they built our company to service real estate agents and to help you guys sell more houses. That's the whole point, because both of them saw that struggle when they were real estate agents. So that's our primary focus, is serving you and making you look good and making your life easier so you can sell more houses. So the way we do that is we prioritize your purchase contracts over a real estate or over a refinance contract on a piece of real estate. So refinances, we tell anybody that wants to refinance, it's going to take them 45 or maybe even 50 to close. We protect our resources to close a purchase loan as fast as possible. Our normal turn times to close a loan is about 30 days on a purchase. We can rescue a loan that needs a faster closing date and close that in around 21 days if it's a clean loan, and that's starting the day the buyer gives us all of their information and nothing's missing. Basically, we have to have it all for our clock on the 21 days to start. But we can do that. A lot of our competition is talking about 45 days and so forth and so on to close a loan. That's a purchase, and we're not ever going to be that long. We're going to be much quicker and much more nimble to be able to help you get your offer accepted. And I want to share a strategy on that.
Wait, John, before you move on, we've got several questions for you. One is, that would be if they paid closing costs. That's a question from Beverly, and Vern is asking FHA and conventional, and are there any prepayment penalties?
No prepayment penalties, FHA and conventional. And I don't understand the first question.
Beverly, you can unmute yourself if you want to ask a little bit more what you're asking.
Okay. Hi, Beverly.
John, you were, hi. You were talking about refinancing from an existing 30 with a few years left, more than 20, and converting it to 20 with the same payment. So they're going to have to fund all their own closing costs, right?
No, ma'am. The interest rates are so low. Let me say this. The closing costs that's a fixed one-time fee for a one-time service. So not talking about property taxes or homeowners insurance. And we can talk about those in a second. But the one-time fees are only about 1.5% of whatever the loan amount is. So you're talking about a really small number as far as adding that onto the loan. So if, let's say it was $5,000, let's just pick that number, a $5,000 add on to the loan is going to add about 20 to 25 bucks a month onto the house payment. But by them dropping from, let's say, a 3.8 let's just use that because that's kind of a low rate from last year. That was the low rates of last year, if you can imagine. Dropping down to like a 3%, they're going to save almost 1% on their payment. And so that's going to make their overall monthly payment go down. Even by adding $15 or $20, that 1% that they're saving on the interest on the loan is still saving them money on the monthly payment, especially if they're going from a 30 to a 30. If they're going from a 30 to a 20, that's where I was saying the monthly payment may go up a little bit or may go down a little bit, depending on how much money they're borrowing. But you can still add the closing costs, and you can add the prepaids for homeowners insurance and property taxes on too, without them having to pay it out of their pocket. Does that make sense?
Yeah, I mean, it's definitely a variable as to, you know, they're refinancing, and it's going to be based on how much they're borrowing, how much gain they get in rate, as far as being able to roll that stuff in. It wouldn't be a blanket move, you know, a blanket that everybody would, you know. Yeah, I just wanted to make sure you were thinking about where, you know, where the closing costs are going to come from.
For sure. Yeah. Closing costs have to be paid on a refi. That's for sure. There's no such thing as a no closing cost refinance. Even though there's plenty of companies that advertise it, there's no closing attorney that's going to work for free. There's no property taxes that's free.
Yeah. Right. The only thing they're promising is that we're not going to tell you.
That's right. All right. That's funny. Yep.
Okay. Thanks, John. Well, I always enjoy with you. A lot of information.
Okay.
Another question, John, from Olgar. What is the minimum down payment for a buyer with an excellent credit score on conventional, especially? And then I'm assuming, just go ahead and address that with FHA.
Of course, yeah. So we are still doing the 3% down payment on a conventional loan if the buyer has income of less than $63,000 a year is generally the income cap. It can change a little bit based off of exactly the house that they're buying, because it's all zip code and then address coded. But most of Metro Atlanta is about $63,000. If they make less than that and have good credit, then they can put 3% down. If they make more than that, then they're going to have to put 5% down, because that program is reserved for moderate to low income buyers. And then, you know, you have your standard VA. You know, FHA is 3.5%. VA is no down payment required, and that loan can go all the way up into the millions of dollars with no down payment required. And a veteran can have 2 VA loans at one time. A lot of lenders don't do that, but we do. And so consequently, a lot of real estate agents don't know that. So now you're in the elite group of knowing a veteran can have 2 VA mortgages at the same time. Any other questions on anything I've said so far?
Vern is asking, is it a full doc or is it a full doc for a refi?
Yeah, except for VA. VA is a reduced documentation loan. Other refinances do require, you know, full documentation on income and assets and credit score. Occasionally we can get an appraisal waiver if the homeowner has between 20 and 25% equity in the house at the time of the refinance, then often we can get an appraisal waiver. And thank you for doing that. I can't see the questions the way my screen is set up. Thanks for reading those out to me, Dana.
You're welcome.
All right. Any other ones?
I don't see any right now.
All right, so I'll keep rolling. Just let me know if you have some. So back again, so a clean rescue loan, we can close in about 21 days. And the way we're able to do this is our employees were set up a year ago to all work from home, and they're still all working from home. So we did that because of like a FEMA emergency weather situation, whether it be a hurricane or a snowstorm or whatever. So everybody works at our company pretty much 7 days a week right now. I mean, they don't mandate that, but they're paying a lot of overtime to try to keep the loans moving. And with everybody working from home, it just makes it a lot easier. Underwriters are not allowed to have a printer. Processors are not allowed to have a printer at home, so they can't print out somebody's documents. So you don't have to worry about, you know, your people's documents being, you know, swiped or anything like that. As far as our turn times and underwriting, we're right now 1.5 days from when I push the button to send the loan to underwriting that an underwriter picks it up and reviews it. And that's really fast. That's on the initial submission to underwriting when we're just making sure the buyer can get the loan. And then once the buyers have given us the rest of the items that we need for the closing, that underwriting approval takes about 5 business days. So we're 1 day on the first one and about 5 days on the back one. Appraisals are taking about 7 days. VA appraisals take a little bit longer. They're taking about 8 or 9 days. And the VA will actually allow the VA appraiser to do a drive-by if somebody wants that. So I've had the VA appraiser actually go in the house. I've had them do a drive-by. I encourage you guys, if you're in a situation where a drive-by is possible, but not necessary, do the real appraisal, because VA appraisers tend to protect their own value more than they're trying to protect the value of the real estate contract. So if they can't see the inside of the house, they're not going to give you adjustments for the condition of the property that they would have if they were able to go in. So always try to let them go in if you can, because you're going to have a better likelihood of a higher appraisal value. So that's something that's really important. I also have a couple of things I wanted to share about good news on forbearance. So there was a lot of information going out the last 2 months about forbearance because of the CARES Act. Well, a few weeks ago, HUD and Fannie Mae released an announcement that said if somebody did take advantage of the CARES Act and they stopped making either their house payment or their car payment or their credit card payment, it would not put them in the penalty box for a year, which is what their original guidance said. So they modified it, made it better to say that if the person is in a forbearance program on any type of loan and they want to do a new mortgage, they have to first get their old loan reinstated and catch up the payments that they skipped. And then they're immediately eligible again for a mortgage. So that would be some good news that you guys could share with your database, because there may be some people that thought, oh my God, I can't buy a house now because, you know, a friend, and isn't it funny how like buyers and sellers put more confidence in what like their coworker at work says about what you and I do for our job? They're like, well, my friend said, or my boyfriend said, or my girlfriend said. And we have to constantly refute things. So I think there's enough misinformation out there about this topic that you can get back in there and give them some really good information that they may not have gotten right, that they're able to get a new mortgage, even if they've been late, so to speak, because of the CARES Act, and take them forbearance as long as they catch up their payments and get their loan reinstated. And on a mortgage, it's actually even more lenient. We won't require all of their payments to be remade. We only require 3. So some people may have skipped 4 or 5 or 6. We just require 3 to be repaid before they're able to get another mortage.
And what would be the interest rates on those?
Same.
Higher,
We can't grade their credit worse. As long as their credit scores, we base everything off their credit scores is what we do. And the creditors were not supposed to hurt somebody's credit scores. So we don't grade them, we don't downgrade their loan, in other words. We treat it just like it never happened, as long as they've just gotten those 2 things done, reinstated their loan and started their repayments for at least 3 payments. So that's a really good thing. And that was that. And then there's 2 other things I was going to say. So if you have a buyer or a seller that will let me get them pre-qualified or pre-approved, either one, before the seller either lists their home or before the buyer writes a contract on a property, we will give them a $250 lender credit towards their closing costs when they close, as an incentive to get them to engage in that conversation earlier on. Because the better job we're able to do at getting them prepared, the better job you're going to be able to do for them in either selling a house or buying a house. And this was the one thing I was going to say on another agent who's at maximum one. She recently put a buyer under contract who had been furloughed during COVID, actually had come back to work. She wrote a contract on Friday. There were 53 showings over the weekend, 7 other offers, and she got her offer accepted ahead of everybody else's because she was able to put in the contract that we only needed 14 days for financing, and then we actually cut it down to 10 days. And then we also said we would close the loan in 21 days. And this buyer was able to buy a house, a super hot house in Woodstock that everybody else wanted. And she was able to do it by reducing the financing timeline and the closing timeline because the buyer had already made application with us. And that's really, really valuable. And guys, that's so important now to be able to get your offer accepted. You can find them the house, right? Like the house will come up and you've got the technology to be able to identify it and get them in there. But getting your offer in and beating everybody else, you know, sometimes you're not the first guy, but you want to be able to go to the front of the line. And that, guys, I asked her how she did it and she said that's what she did. So we can close loans that quickly for somebody that's already been pre-approved or pre-qualified because we know that we've got what we need to go ahead and get started as soon as we have that binding contract. So in order to incentivize that for you guys and for your sellers and buyers, tell them we'll give them a $250 lender credit because, you know, let's face it, like everybody likes a little bit of extra money and a little extra bonus for doing what they need to do. So
that's a brilliant idea.
Thank you. Thank you so much. So that's pretty much all I had to say. I will say one last thing, you know, I'm still seeing agents, and I don't think this is ever going to change now, doing a live 360 video showing of a home, because if your buyer can't get off of work and you're available during the day, go show them the house. And there's lots of apps that do that. WhatsApp, I keep harping on, but that one's one that's free. There's several others that you can pay for, but you can do a live streaming showing and actually write a contract. And I'm seeing more and more of that than I ever thought would happen because let's face it, I mean, video is like so much real time now, and we're trained to trust that as consumers, especially if there's a live person there that can say, hey, go back and show me that stove again or whatever it is. So anyway, I appreciate you guys so much. I really thank you so much for your business. And I think Dana has a question.
Couple more questions.
Okay.
What is the maximum amount of seller contribution to buyer's closing costs? And what is the PMI on various mortgages?
Good question. So whoever wants the PMI, if you will identify yourself, I will text you my app. I have an app that will calculate that for you. It's different for different loans and it's different for different credit scores on different loans. So that would take a really big whiteboard and probably about 2 markers worth of ink for me to write it all out. And I've got an app that will do it for you. So if you guys want that, you can either just text me. Let me just do that. That'd probably be easier. You guys just text me. I'm gonna give you my cell number.
John, I'm recording this and I'm gonna post it. Just
okay, good. Yeah, for sure.
Is that okay for your cell number?
Yes, my cell number is 770-480-8210. So again, I'll say it again, 770-480-8210. So just text me and say, hey, can I get the calculator app? And I'll just text it right to you. And that'll be super easy. That way you can always know what the PMI is based on the credit score, because it lets you enter in the credit score and then it spits out the PMI for you. And it'll do it for FHA and conventional, and also does it for VA and, you know, that kind of USDA, but those are pretty much standard.
I just typed all of that information in the chat for those of you guys that can see the chat.
Awesome. Okay.
And seller contributions to various.
Yeah, so seller contributions, my calculator doesn't do that, but I can make it pretty simple. So on a conventional loan with 5% down or 3% down, the seller contribution is 3%. Okay, so 3% is the smallest, and that's, well, I'll say this for an owner-occupant. If it's an investor, no matter how much they're putting down, they can only get 2% seller concession. Then going back to the owner-occupant, as the down payment amount increases, so does the seller concessions, okay? And the thought behind that is the more money the buyer has invested in the deal, the less they're relying on the seller to help them buy it. So the more money they can put down on their own, the more the seller can give. So at a 10% down payment, the seller concessions go to 6%. At a 20% and greater down payment, it goes to 9% or maybe even 12%. But I've never even seen anybody ask for 9% seller concessions because it never even costs that much. So just remember, like it's at 10% down or greater, the seller can always give 6% in seller concessions. And that's really, I think, all you really need to know for practical purposes.
Now,
That's
John,
unconventional.
is this just seller concessions, or would this be an agent commission concession in combination with the seller concessions? This is
Same,
total buyer concession.
It's total buyer concessions for the closing cost is what we're talking about. So what we call that is an interested party concession. That's the actual blanket that's under, and that includes the seller giving a credit, or the agent giving a credit, or even the lender giving a credit, because credits can come from all those three different places. So anybody that's an interested party, the max are those concession amounts that I said on conventional loans. Then on FHA, and really it's FHA and USDA and VA, because those are all your government loans, it's automatically 6%. It's never more than 6%, it's just automatically 6%. So those are a little bit easier because they're always 6%. It's the conventional ones that go from 3% to 6%. Great questions, y'all. Any others?
I don't see anything right now. Any more questions for John, anybody? I have muted you guys, so you can either type them in the chat or you can unmute yourself and ask verbally. All right. I just have a couple of comments while we have you, John.
Okay.
My understanding, and again, I have the opportunity of being on all the sales meetings, so I get the advantage of hearing a variety of lenders and closing attorneys speak. And one of the exciting things for you guys that I'm hearing is this recession was not an organic recession. It was totally an artificial recession based on extenuating circumstances. And as those extenuating circumstances disappear, i.e. states opening up, businesses opening up, as we've seen last week, the numbers are increasing at a dramatic rate. So the good news, that's the good news. The other thing is there are not going to be a slew of foreclosures and short sales for a variety of reasons. This recession is not an organic recession, number one. Number two, people now have equity in their homes, whereas they didn't before. That the market forces and everything that combined to create the huge issues that we had in 2008 are not in play right now. That and John, I'll let you comment on that in a minute. That being said, however, be careful, and you guys have got to educate your clients and your prospects when you hear the news, because coming up in June and July and probably into August, we are going to hear a massive increase in foreclosures. That has nothing to do with the market. That has to do with all the courts being shut down for months. These are all foreclosures that had been in the works January, February, March, and the Georgia courts are just opening up this month. So that's all of those that had already been in the works, and notices had already been sent, so forth and so on, the months prior to that, that are just playing out. So there's gonna be, there's an increase in the number because everything is getting pushed to a limited time frame. But don't let that scare you as an agent, and don't let that scare your clients and customers. Your buyers are going to want to really lowball some offers, but that is not indicative of what's going to be the foreclosure or short sale market moving forward. And John, I'd love to hear your lender comments on that.
Yeah, absolutely. And let me grab, so I have a whole wall here. I'm not going to show you, but of documents, because I have to be able to grab stuff that's related to COVID-19. And Let me see if I have it in this stack right here, but it was the statistics, and I shared it on a couple of sales meetings ago. Let me see if I still have it at my quick fingertips. On the here we go. Is it this one? Nope. It's what I'm looking for here, you guys. Bear with me just a minute. Is the percentage of properties that are owned free and clear and how much equity people have. I'm not going to make you wait much longer. Yeah, I don't think I can lay my hands on it super quick here. But anyway, I'm gonna do my best to quote it, and it's this. So during this economic recession, 40% of all homes are free and clear in America. 40%, you guys. That is amazing. Okay, and that's not by a happenstance or an accident. That's because people that came through the housing recession, we cleared out all the bad loans that were the pick-a-pay, the reverse amortization, the no down payment for like really bad credit score people. All those went away. And the people that had their mortgages, most of them were able to refinance to a lower interest rate, and then they paid them off in the last 10 years. So that's why there's 40% of all houses that are just free and clear in America. Of the remaining 60%, the average loan to value on those homes is about 70%. So those people have 30% equity. 60% of those have 30% equity. Those people are not going to get foreclosed on. And neither are the people whose homes are free and clear. So there's not going to be this housing crash, because the loans, like any of you that have had buyers recently know how hard it is for somebody to get a loan. Like we need everything except the DNA sample, okay? Because of what happened during the housing crash. So that's not happening again ever, because our industry is very much makes sense. So what Dana is saying is absolutely true. There is no housing crash coming. There is, if people are saying they're sitting on the sidelines waiting for it to get better, you need to drop them. Okay, let me just be really honest. You need to drop them because they're not serious, or they're not allowing themselves to be educated. So if they'll let you educate them and you give them the information, then don't drop them. But after you still give them the information and they're still like, no, I'm still going to wait because I think I'm going to get a better deal, they are out in left field and you might not be able to bring them back. You need to go find somebody else, because home prices are going up, you guys, and interest rates are not going to get much better. They may get a little better, but you guys, the affordability factor that NAR tracks is at an all-time high, meaning somebody can buy the most amount of house for the least amount of payment right now is there's pretty much ever been. So, you know, I recommend you guys go to NAR, grab that statistic, and show it to them and say, hey, look, 5 years ago, it would have cost you even more for this house because the interest rates would have been higher. And homes are just going up in value constantly. I'm constantly amazed whenever people call me to refinance. I had a guy that bought a 3-2 ranch on a basement in that little area of Woodstock that's kind of in the north Cobb. It's right off of Woodstock Road. He bought it last year for $198. Not last, excuse me, 2 years ago for $198. Today, that house is worth $250, and he has not done anything to it. It's on septic, and I'm refinancing him and getting rid of his PMI, which is just mind-blowing, because he was moving here from Kansas, and he was like, John, I don't think this house is going to go up in value. Like where I'm from, we only get 3% per year appreciation. You know, I think this agent's being too pushy telling me to buy this house. And now he's like so happy. He's like, man, I can like get rid of my PMI and get a lower interest rate. And that's in not like the hottest area of our market. So anyway, I just wanted to share that with you guys because this is not going to change. And it's a really, really, really great time to be in real estate. So congratulations, you're here. I'm excited.
Awesome.
All right.
All right. I'm gonna, George, do you want me to go over a little bit of information? I just unmuted you.
Oh, okay. Yes, go ahead then.
Okay, and I just texted Doug. He's on another call right now, so he's hoping that he can make it shortly. So just a couple of things, and I'm not at my regular computer, so I can't pull up the statistics that I was going to pull up for you guys. But generally, as a whole, maximum one we are still doing great. Our numbers are off from this month last year. However, our January, February, and March numbers were more than they were in January, February, and March of last year. Our winter, we never had that traditional winter months. We were busy. So everything shut down in March. So April and May's numbers are more reflective of what happened 30 and 60 days ago. So we are off a little bit, but everybody is doing great. So the all right, so let me find this. Generally speaking, all right, let me pull that up. Hang on while that's pulling up. In March, the realtors, I don't have them pulled together right now, but if you are a member of a board, so you are in MXGR and part of the affiliated with the Powers Ferry office, in May of 2020, the agent sales volume, so the total volume is over $7 million in volume. Of that, there were 2 million of that was in listings and 5 million of that was in sales. So that was for a total of 32 total transactions. And the average sale price was $221,131. And for the Realty side, if you are affiliated with the Powers Ferry office and you don't belong to a board, for May of 2020, total volume for all transactions was $4 million. Of that, 1.5 million was listing side business and 2.4 million was selling side business. And the average sale price was $187,219. You guys, these average numbers are crazy. When I was in real estate, the average sale prices were in the 80s. And it was like, oh my gosh, you have a $200,000 house. You're making it. You're awesome. So it's really interesting seeing the sale prices go up. Also, generally speaking, pending closed. Okay. Year to date in 2000, I'm trying to read these as I go across. For all of maximum one, in May of 2020, Dawn, the compliance broker, head of compliance, she puts all these together in amazing reports for us. I can't access my emails right now. I'm having some email issues, which I'll address in a minute. So I'm looking on a different report than the amazing reports that Dawn pulls together for us. But it looks like for May of 2020, we had a total sales volume for closed, things that have actually closed, and we have closed them out in our system, $51,907,000 plus in sales volume closed. And we still have over $400,000 in pending sales for May that have either closed, but we're waiting on documents from y'all, so we haven't closed them out in our system, or they're being rolled over into June. So the numbers are just phenomenal. I mean, they are picking up and everything is getting busier and busier. Compliance, both Kim and Dawn have way more contracts than they have had in the past couple of months. And all of your branch CEO advisors are very busy processing earnest money checks and commissions and contracts and agents. We're getting a ton of agents too, which is amazing and awesome. So definitely we're ramping up again. We did have, like everybody had, a little bit of a slowdown, but I don't think it was anywhere near what industry-wide there were predictions of. And just like you guys are experiencing out in the field, there are buyers and sellers that are still moving. And again, agents, you guys go after those people. Let the people that have houses to sell know what's going on. They need your help, and they need to know what's going on. And if you are working with a buyer, the best thing to do is absolutely get them with John, get them qualified and processed as far as you can go up to actually having a contract. That's going to make your buyer a stronger buyer, especially in the case of a multiple offer situation. Couple other things, my email, if you guys have gotten emails that don't, if you ever get an email from a Maximum One staff person that doesn't look appropriate, either in the content or something unlike anything we would ever send to you, do not open it, do not click on it. Everybody's emails, everybody's Zoom accounts, everything is getting potentially hacked right now. So we have our IT people on it, getting more security. We are increasing the security on our emails. I apologize if anybody has gotten some extremely inappropriate emails from me. They are not from me, please understand that. So in the meantime, we are switching servers. My email is the guinea pig before we do the rest of the staff's emails. So in the meantime, I have not had full access to all my emails since Friday. So if there is anything that you guys ever need from me, get with, if you have my number directly, feel free to contact me by phone call, or get with Vivian or even Jane or George or someone, and get with me by either text or phone call is the easiest way right now. We're hoping the email situation will be resolved by the end of this week. So that's one thing. The other thing I want to talk about are classes. We have all of June CE classes are virtual. We are still playing things by ear to figure out what we're going to do for July. The awesome benefit about these virtual classes is classes that you would not otherwise take, with the instructor being in a geographic area that's far away. You have access to taking them virtually. So go online. If you go to eagentweb.com and click on the calendar and then click on an area, you will see all of the virtual classes. So tomorrow is a class on FHA financing, and that is offered through our affiliated lender with the West Cobb office through Homestar. We have a class on Thursday using Instagram to grow your real estate business. Friday is a class on the GAR contract writing and negotiations. Next week on Tuesday, an ultimate buyer system CE class virtually. Wednesday is a business planning CE class. Next Thursday, a video marketing strategies class. I'm teaching license law next Thursday. Home warranty fundamentals next Friday. The 2020 RE forms contract class I'm teaching on the 23rd. Lead generation, reverse mortgage, ethics, marketing to millennials, listing, a GAR contract class again, and advertising. We have a ton of really, really great classes. And again, I strongly suggest, while they are virtual, to take advantage of them, because some of these, the instructors are teaching out of McDonough, Alpharetta, Woodstock, a variety of places that you may not travel to if it was a classroom class. What are we doing in July? We are not sure yet. We are sort of playing it by ear. More than likely, what we're going to do is, once we start back with the in-branch classes, we are still going to have a few virtual classes, but they aren't going to be as many as we are having right now. Any questions for me about anything that's going on? All right, there is one other question. This is for you guys. If any of y'all have any coming soon listings or anything like that. I have a prospect who is looking for a small 1-bedroom condo for lease purchase in Midtown, Dunwoody, or Buckhead. Can't find a lot on FMLS, only either lease or purchase. Any suggestions on how to find a lease or buy properties? That's for any of you guys. If any of y'all have anything, I will also suggest you guys, y'all need to check Georgia MLS too. As a broker, it's a lot less expensive to be a member of Georgia MLS as opposed to being a member of FMLS. A lot of the larger brokerages are members of both, but there are a lot of smaller brokerages or brokerages watching their money right now that only belong to Georgia MLS. So if you can't find properties on FMLS, I strongly suggest y'all look on Georgia MLS. There are a lot of properties on GAMLS that are not on FMLS. So that would be one suggestion I have. Does anybody else know of anything or have any other suggestions where to look for properties? Nope.
I do. If she has a particular community that she's interested in, why not just call the people who are living there and see if they're interested in selling? So they're prospect that way.
Great idea. Great. And we need sellers too. So awesome. And I can't think of anything else. I've done a couple of videos on the one I just recorded yesterday and I have not posted yet is on the 10-day letter and what happens. We are having a few more terminations than we normally have. And we have a lot of agents that have never had a termination before, which is awesome. Good for you. So we're having a lot of questions on what happens if a buyer terminates and the seller won't sign the agreement to release the earnest money. So I have a video coming out on that. It'll be posted to my YouTube channel either today or tomorrow, and it will be the video featured in Sunday's email. George, you want to talk a little bit about accountability and what you're thinking of for the accountability sessions for Powers Ferry?
Yes, Dana. Before that, I was just thinking about the stats that you brought up. I was going to suggest that that is very, very encouraging when, like, overall, we get to know what's going on, like the stats that you provided. So, like, in monthly meetings, if you can just summarize something and tell us. So it's like an encouragement, you know, to us or to me or to agents.
So that sounds great. And also Heidi sends out a weekly email to you guys, to all the Powers Ferry agents that's just to y'all. And I'll ask Heidi to put in the information also because the branches all get it from Dawn and Kim through, well, Dawn puts together these reports. So I'll make sure that she shares that. It also has y'all's, let me see if I have this. It has y'all's top agents per branch. So in May for the agents, and again, I don't have these totally together, but I have them separated by if you are in MXGR, meaning if you're a member of a board, or MXGA. So the top producer, do y'all want to hear who the top agents were in your branch for May?
Yes. Yes.
All right.
Yes.
So number 1 in May for the realtor side is Donica Parker. Number 2 is Danielle Aline. Number 3, Matthew Scher. Number 4, Lorna Petty. Number 5, Corma Bailey. Number 6, Kieran Ramaretti. Number 7, LaShawn Hallinan. Number 8, Whitney Elizabeth. Number 9, Rhonda King. And number 10, Lisa Osborne. And for MXGA, the Realty side for May, the top performers for Powers Ferry. Number 1, Greg Moore. Number 2, Tony Cade. Number 3, Chris Zugloff. Number 4, Steve Matthews. Number 5, Lucia Baby. Number 6, Precious Edit. Number 7, Cassandra Picard. Number 8, Jack Barnett. Number 9, Justice Haga. And number 10, Jill Fields. So you guys also, the encouraging thing is those are a lot of new names that we haven't seen in a while. So there is business going on. Hi, Doug. Welcome.
Hi, Dana.
So George, I will ask Heidi to make sure to put those out monthly, okay, and then I'll be able to discuss them in the sales meeting.
Okay.
All right, Doug, over to you. You're welcome, Vern.
Dana, thanks so much for having me. Just want to say it's a pleasure to be here even when it's virtual. Just want to remind everybody the importance of now more than ever of having a team, and the fact that having a closing attorney at your office be part of your team is something that we are so proud of, and that we take so seriously, that we're not a vendor that wants to just earn your business, but we want to be somebody that you know that you can call on, that's always there for you, that's on your team. And even if it's not a transaction that we're handling, knowing that we are your partner, and that you can call on us, and knowing that if it is a transaction that we're handling for you, that we're part of your team and always want to make you shine and look good for selecting your industry partner as the closing attorney. Dana, that's pretty much one thing that I'm always passionate about, is just reminding folks that we are very vested with maximum one with each office that we're in, and we take that team concept very seriously and take that to heart. And that's really important to us, is knowing that we are there for you and that we are on your team.
Awesome. What's going on with closings? Are we still virtual? Are we Are we notary? Are we in together? How many are Shafritz and DDean allowing into closings? What's going on? What's the latest with that, Doug?
Dana, thanks for asking. We are everywhere that people ask us to be. For traditional purchase closings, our recommendation, which most follow, is we split up buyers and sellers. Either we'll do them one at 10 and one at 11, do them in successive hours, just to minimize the number of people in the room at a time. We've even had some where they're just in different parts of town. One I did yesterday, the seller was in Swanee, the buyer was in Alpharetta. So just maintaining physical separation, keeping group size smaller, and we're actually able to do it fairly efficiently. The one yesterday went really smoothly. The seller and buyer signed at the same time in different offices, and we had it funded within not long after both of them had signed. So we still do some traditional closings, try to break up buyers and sellers at different times. We still do some Zoom closings, which we either overnight documents the day before, and then we walk people through on a Zoom call just like we are now, have them sign and overnight it back. Only issue with that is the deal doesn't close and fund until the documents come back. So it can add 1 day of delay getting the documents back. We've still on occasion, have had to do travel closings. I did one for a buyer outside his garage on a 6-foot card table where we stood at opposite ends and we slid documents back and forth to each other out in his driveway, which was kind of fun. So we do everything. And for some buyers, for cash buyers, we're able to even do some sort of like you use DocuSign for your contracts. We can do some e-signing. Easier with the buyer. With the seller, we need a wet signed warranty deed. So we've always got to work something out with some paper there. But I think the short answer to your question is we have most every industry option available, whether it's in-person closings and smaller group sizes, Zoom closings, e-sign closings, and travel closings.
So a couple of questions, Doug. Are agents welcome for the more traditional closings, and for the e-sign closings? I imagine that is still totally dependent upon lender approval.
That's right, and that's a great point to mention, is that when there's a loan involved, our ability to do Zoom or e-sign closings is lender dependent. We have always taken the position, there were some firms that said they didn't allow or permit agents, and we said there's value to what you do and you're always welcome. But we did always say, but if you feel like things are going well and you don't have to be there, we could always Zoom you on if you wanted to be there virtually. And what we're seeing is, as more businesses are opening up and people are getting more comfortable just getting out and wearing a mask. I see more and more agents come to our closings, and they've always been welcome. We've never said you can't come, but we are seeing more and more agents attending.
Awesome. Anybody have any questions for Doug specific to closings or issues going on, either in practicality or procedures or processes, or any issues coming up? I have a question while you guys are thinking. Based on all of these issues going on and the courts being closed, but some of their admin being open and deed recording being delayed and now back open, and that gets totally county dependent. Two questions. One is, do you foresee in the future any title issues with Clouds on Title for recording issues? And after that question, Doug, my question is if you'll want to comment a little bit on taxes, since we're coming into tax season, even though we're in June and July, because the federal government and the Georgia state government deferred tax day to July as opposed to April. So if you could comment on those two things, that would be fabulous.
Dana, thank you. Those are great questions. First, I will tell you from the title perspective, as an agent, I hope you are always encouraging your buyers that they need owner's title insurance. I will tell you they need owner's title now more than ever. To their credit, when the pandemic started, our title insurance companies really stepped up and acknowledged that there is potentially a greater risk on title. And they've said, and we're insuring it. There's no special cost, no special form. For title exams, we have everything at our disposal, including there are some cases where we get the owner's title insurance for our current owner and say they're already insured. We will do an online update and rely on their prior owner's title and insure it with no special exceptions. So from a front-end title, we do everything we can. First, we get into courthouses whenever we can, and more are opening in the deed rooms. When we can't, we do things electronically, rely on prior policies. So the front-end title work, we do the best we can, especially in view of what our title insurance companies require of us. On the back end, for the past year and a half, we have gone to all e-recording. And that greatly speeds up the recording process. And even while the courthouses have been closed, most of the metro counties, except for Gwinnett, e-record. Cobb and Cab, Fulton, all allow that. So that has helped us maintain business as usual and minimize delays. And to the extent title issues are caused, I tell people that's why you have title insurance. Is for the unknown things that can't be prevented. But I think your question was, do I foresee a lot more title issues? And the answer is, I really don't. With everything that we're doing between the front end title work and the back end, there is a longer gap period and a delay recording. But I think the things we're doing, I don't expect our title claims to surge dramatically. But it is, that's something that could come up. That's a possibility. What was the second part of your question? That was about claims?
If you could just comment to agents in terms of talking to their buyers and the sellers regarding the tax prorations, because tax season wasn't in April, but it is coming up in July with not only federal taxes and state taxes, but also as we get closer to property taxes, just if you want to just to comment a little bit on how that's going to look on closing statements. And John.Bohannon, I don't know if you want to comment on that also regarding tax transcripts and some things like that. But as far as like closing, like on the settlement statement, which side is it going to show on, and so forth and so on. Again, this is usually a discussion we have. Well, we always have the property tax discussion coming up as we get closer to August. But I didn't know if there's going to be any issues with federal and state tax season being moved to July as opposed to April because of everything going on.
I think the answer to your question is that's going to be for the federal and state income taxes, more of a lender question as how they handle it and how they require it. For us as the closing agent or closing attorney, we're looking primarily to the property taxes. And what we do is follow what the contract directs. And the contract basically directs if the tax bills are out, pay them and prorate accordingly. If the tax bill for the current year isn't out, use the most recent bill and prorate accordingly. So pretty much the direction in the contract, which is the standard language in both the GAR and the RE forms, is how we continue to handle it. If a bill's out, pay them current and prorate it that way. If there is no current bill, prorate it the other direction using the most recent tax data available. And that's what we'll continue to do as we run into this tax season. And of course, the GAR forms always stipulate the parties agree to reprorate between themselves when the bills come out if they're materially different. But from a Georgia and federal tax, that shouldn't affect us from the closing perspective, but it may affect how the lenders, whether they underwrite their loans or what they require in the way of tax returns to approve loan applicants and so forth. But the won't change much on the property tax side. And I think the issues with delays in filing federal and state taxes will be more of a lender issue than a closing attorney issue.
Awesome. Anything else, Doug or Rich? Rich, welcome, that you guys want to add?
I have a question.
Okay, Vern.
Go ahead.
As agents, like normally we go to the clerk of Superior Court or whatever and kind of grab that address. And then I've seen, I don't know how that, I haven't seen the address in some properties that are in a PUD. I just see like the full, you know, normal like 19th district, you know, this lot, this, but without a street address. And so, and then I'm finding that they're adding like Southwest or Southeast and different things like that going on with addresses. But my biggest question is, what are we to do when we're, as an agent, sometimes when we're going to see who's actually on title? That's what I'm running into, like little hiccups, finding out that, oh, there's someone else on title, but somehow it wasn't recorded, like a relative, like a son, a grandson. I'm like, why didn't you put that in the courthouse? And then I understood that you don't have to put a POA if the person becomes a POA, but we still need that person's signature too. So I'm having a little confusion about POAs and other people being somewhere in the background.
Let's split up the question and let me jump into both halves. The first half with respect to property legal descriptions and addresses, my tips to you are, one is use the county tax commissioner. That will give you the owner of record as of January 1st, according to the tax commissioner. It will give you an address. The other thing for addresses that I always recommend is USPS.com, the U.S. Postal Service. If you go to USPS.com and use the drop down for find a zip code, you can verify that you have the correct address. It will help you with all the directionals, whether it's southeast, southwest, northeast, northwest. The other thing that you have as a resource to you through Maximum One is Maximum One has a subscription to the GSCCA, Georgia Superior Court Clerks Cooperative Association. It's gsccca.gov. It's a subscription-based site, and Maximum One has a login available to you, which lets you pull up deed images, and you can search to see, is the current owner still the owner, or have there been any subsequent transfers, if they've added anyone to title, that sort of thing. So the tax commissioner website, the GSCCA, and the USPS.com find a zip code will all point you in the right direction. And the other part of that, I'll say, is if you need help with a legal description or an address, is call your partner, call your friends at Shafritz and Dean. We can help you look up a legal description, help you with an address if that's something you need assistance with. The second part, from a power of attorney standpoint, is usually the power of attorney gets handled in connection with closing. If your seller won't be able to attend closing, let the attorney know up front. They'll work with your parties to make sure that they have a good power of attorney, and we'll record it together with the deeds. If you're concerned there might already be a power of attorney, checking the GSCCA by name is how you'd look that up and find if there's already a power of attorney recorded.
Okay.
Vern, was that responsive, and anything else?
Yeah, and just normally how we try to make sure that, you know, there's no hiccups, because I had a hiccup before where somehow the seller never told me that they signed a contract with an investor. And then the investor was doing a assignment because the daughter had died, and she told me like that the property was like transferred to her, you know, the owner, the mother that was still living. And then Amy called me and she's like, hey, you know, we've got some stuff going on here on this title. And I said, what? She said, yeah, it's been recorded that there's another contract out there. And it also has another contract assigned to it. And it was mind blowing. And of course, you know, we had to cancel everything, you know, the listing, the contract, the whole bit, because we thought we were doing a simple probate sale, and it ended up being a debacle. And I guess, investor out there that she never disclosed to me that she had written the contract. And I asked her directly, I said, hey, so did you write a contract? She said, no, I talked to a person, I never signed anything. And then there it was in the county records that there was a recorded contract. It was mind blowing. I said, how could she not know that she signed a contract? And there it is right there in the Clerk of Superior Court, recorded along with the contract to another buyer. So I not have those things happen where a seller is able to basically lie to me and me be completely ignorant that there's something out there recorded that I don't know about, you know, on a listing appointment. And then actually, you know, I mean, it was the craziest thing, and thank, you know, goodness it got squared away, but it was just, I don't ever want that to happen again, where a seller is able to lie to me and I didn't know something was already recorded, you know, attached to that property. So I guess my question is, how do we as agents do kind of like a quick lean search to figure out if something is out there that's going to make a transaction fall apart?
My best answer to that is use the GSCCA resource. I actually did a presentation in your office. It was, I don't know, might have been 6 months ago or so, but I walked through an agent preparing for a listing appointment using the GSCCA, pulling a copy of the vesting deed, and in the example I gave, they pulled the vesting deed, they pulled a copy of the security deed, so they knew about how much they had borrowed. We also, in the course of doing it, found, in the example I used, we found a lien because they hadn't paid their taxes, so that the agent going in on the listing knew they just bought it 2 years ago for $285,000, and they borrowed $280,000 on their loan, and they had a $2,500 property tax lien. So they knew right going in that this seller didn't have a lot of equity. They knew that they had a property tax lien. They knew that they were dealing with the right seller, and that nothing else had yet been recorded. No other, like in the case, and I'm familiar with investors who record the contract to make sure the seller doesn't sell to somebody else, but checking the GSCCA will tell you if anything's been recorded like that.
Okay. I mean, it was something I knew for 20 years, so I was really blown out of the water. That blew my mind. Right. It was hurtful too. I mean, It was very hurtful that they weren't honest with me.
That's the other frustrating thing is people aren't always honest with you, and you can ask the right questions, but you don't always get the right answers. And using the tools like the tax commissioner, the USPS.com, and the GSCCCA will at least give you some background, some data to work with, to kind of at least cross-check what they're telling you.
Okay, awesome. I thank you.
My pleasure.
Also, you guys, Vernalisi, I think I've got Doug's presentation in the reference section of Paperless Pipeline under GSCCCA, and it's gsccca.org. It's not .gov, it's .org.
I'm so sorry. Thank you.
So if you go to the reference section of Pipeline, I believe I have those notes. If not, I will, again, once I can get back on my actual computer and my emails, I'll see if I can find that presentation, email it to you.
I have a question.
Go ahead.
Hello. What if a seller has recorded a minor on title, but now they want to sell? What steps need to happen to get the minor off?
That's a great question. Here's the problem. You can add a minor to title, but you can't get them off. Once they're on title, typically you have to go to the probate court, get a guardian ad litem appointed to represent the child's interest, and the guardian ad litem would typically act on behalf of the minor child. Where we see this most often, unfortunately, are people who die without a will. And if you die without a will, Georgia law says your property goes to your spouse and children in equal shares. And that's a common way that minor children wind up on title, even when it was never even intended. And then that process is lengthy and cumbersome, and there's some time involved. But it involves getting a guardian ad litem from the probate court to represent the minor's interest and to sign the documents on behalf of the minor.
Can you spell litem?
Sure, it's a fancy Latin word because lawyers like to do fancy Latin words. Guardian ad is actually AD instead of at, and litem is LITEM. So it's a guardian ad litem in the probate
court.
I had it right.
I had it right. I just wanted to make sure. Thank you.
Congratulations. Sure, and I hope that's helpful. Good job.
Thank you. Thank you.
Mm-hmm. And anything else for the Stump the Attorney section of the class? I'm enjoying this.
I have an issue since we have the advantage of having both you and Rich on board today. We've had an issue recently where we represented, I don't remember which party we represented, but it was a contract in a subdivision. There was no HOA, but there were recorded, covenants. And so there was an issue with the buyer, the buyer had an issue with the seller because the seller did not disclose that there were recorded covenants with the property that did have some restrictions on there, and the seller had no clue about it. So there were lots of issues. So that was an interesting one I've never run into. My point was, well, if there's no HOA and somebody wants to actually enforce something in the covenants against the buyer, who's going to pay for it? But just from a legal perspective, and I believe it did come up in the title search as they were getting ready to go to closing. But I thought, I'd love to hear y'all's legal perspective to agents as to what to do, how to find that. Is that an issue? Is it not an issue? I've never run into that, and it was very interesting.
Fortunately, that doesn't come up. Usually people know if they have covenants or not, but oddly enough, not always. And oddly enough, in the case that you mentioned, I had the same thing in the house I live in now. It has 3 pages of handwritten restrictive covenants and no HOA. in the course of doing the title exam, when we prepared to buy it, we found a copy of the covenants and said, wow, these apply. From a buyer's perspective, if he found them significant enough, the GAR contract gives him the option of, presenting title objections to the seller. And he'd say, hey, I have found a title objection you didn't disclose, and it's meaningful to me. And it could potentially give a buyer a way out of a contract by saying, I found something on title that you can't fix. It can't be removed by, paying it off like a loan or lien. So it could potentially give a buyer an out if they find covenants that weren't disclosed.
You also, Doug, might comment on, covenants and restrictions do lapse, and they aren't enforced for many, many years. And then we have certain restrictions which appear in the public records. For example, there are deed restrictions and covenants and restrictions that are that violate fair housing in 2020, and those are on their face not lawful and cannot be enforced. But just talk about the covenants and restrictions and how long they generally last, and when I'm going to stump the attorney, because Doug knows these answers off the top of his head, but share that with everybody.
They're older covenants. The older Georgia law basically provided that covenants expire after 25 years, or excuse me, 20 years. I believe it was 1995, the law was actually reversed, which made them renewable after 20 years. There's another thing that comes into play when a developer sets up covenants is whether or not he makes the property subject to the Georgia POA, I believe it is, Property Owners Act, which has the effect of automatically renewing covenants. So there's a lot that goes into it, and determining. The question is, when might covenants expire? And the answer is, it depends on how long ago they were recorded, and it depends on whether or not they were made subject to the Georgia Property Owners Act, which provides for automatic renewal of the covenants.
So how would an agent determine this information?
One way is going back to the GSCCA is hopefully you can pull a copy of the covenants, or the seller, if you're a listing agent, your seller and owner can provide a copy, and you want to look to see how old they are, when they were recorded, and third is check with the HOA. The HOA typically has this information at their fingertips. It's very important to them because HOAs like to have that authority and control, so they generally have readily available something to show why they are still a valid HOA and that they can enforce the covenants.
And then call you and Richard, our partners in business, and say, help.
I always throw that out.
If I can jump in and share one thought, Vern, as you were asking your questions, and honestly, Doug does a much better job of technically answering questions, but I can share with you, so I let him do his thing, that what we have seen, and it helps us sometimes, it hurts us sometimes, but listing agents will partner up with their favorite closing attorney, which fortunately we're blessed that several of the good agents in this office are working with us today, and we appreciate all of the business. But we can run a title up front, and the cost of the title is to us, and the incremental cost to the seller is very, very nominal. We can clear a title We can discover people who are shouldn't be on title. We can issue a title insurance commitment, which can give a buyer the confidence, especially in this day and age where, Vern, what happened to you is unfortunately happening all over town. Investors get to a homeowner, they get something under contract, and the homeowner has amnesia that they signed something, and the next thing you know, it's recorded in the public records. But we can even work with folks, and our firm has a relationship with our title examiner that, as long as our fallout is not fallout for us, would be like a contract dying for you guys. Our transactions not closing, the percentage is not too high. We don't get charged. We won't come back and charge you. So, if you get a property under contract, under listing, one of the things you can do is ask the seller if they want to do a title exam. And what that also does is it enables you to say, in your remarks, Shafritz and DDean is clear title, and we'd like to have them close the transaction. So, and that's not unique to Shafritz and DDean. We see it. You guys probably see it in the comments all the time. Must use so and so, but just an idea on something we can do. And Doug hit the nail on the head, Vern, when he was talking to you as well, when he said we are here as a valued partner, and we don't want you to incur too much frustration. It's great to be able to, they say teach a man to fish, and that's what Doug did with and does with his GSCCA training. But we're not expecting to train title abstractors. We want real estate agents to maybe be able to do something real quick without us. But if you need our help, reach out and we'll get you the answers you need, and we'll get them to you quickly.
Awesome, thank you.
I think just to add on that, not that there's no way we can know if there was already an assignment contract on it. That's just crazy. But one of the things for all agents, if your seller, either if you're on the listing side or the buying side, when you have when you're listing a property or you have a buyer that's interested in a property, you guys, I would go to FMLS and Georgia MLS and do a search for other active listings and look at the closed listings and look to see if the agents, the former listing agents, have listed if there's an HOA or not. And if you're seeing a discrepancy, some are saying there is, some are saying there's not. If you're seeing a wide variety of information, absolutely the next call is to Doug and Richard saying, hey, I need some help here. I'm getting some different information. And I think maybe when we get back in branch, Doug, it'd be a great opportunity to do that GSCCA class again. But you guys use the listing services to help you. If you're seeing some consistent information, that's one thing. If you're seeing HOA mandatory, HOA voluntary, no HOA, that should start raising some bells for you. And then contractually wise, if you are a buyer representing a buyer and a seller has completed the seller's property disclosure form, there is a question in the seller's property disclosure form that says, is there an HOA? And if the answer is yes, it has a little note in there in guard that says the seller is required to also fill out the community association disclosure exhibit. So that's another sort of cross checks and balances for you if you're at that far along in the process. But just a couple of broker tips on trying to find out what's going on with a property as well. And you could have some sellers that have lived there for 20, 30 years that have no idea or no clue. Like if there's a voluntary HOA, or if there's an HOA but there's like no swim tennis, they just maintain the front. There probably are some covenants and restrictions recorded, but nobody has any idea what they are. So. All right. Any concluding remarks from Doug or Richard or John.Bohannon? All right, Jane.
I would just like to say one thing, which is it's great to see a lot of your beautiful smiling faces. I unfortunately, unlike my law partner, am sheltering in place due to health concerns. But these Zoom meetings with folks, they keep me relatively sane during these challenging times. You know, and so it's great to have so many people on the call, and you know, our firm really does appreciate the relationship with the individuals as well as the entity Maximum One, and wish you all of the best. I think we are coming into some great months. We're going to be coming out with our good news report, which we do monthly, and the news from a home front, from an economy, is really, really strong for all of us. And we are hopefully, you know, going to dodge the bullet that, you know, was so impactful on the industry back in 2007, 2008, where, you know, the Great Recession really crippled the housing industry. So this time around, there's a lot of optimism in the market, and rates are low. And I don't know if Doug or anybody, Dana, did you bring up the fact that CoreLogic next year says that for the first time in maybe 40 quarters, we might see a dip in values, but it's 1.3%. And if the market goes up this year by an estimated 4%, which it will due to lack of inventory, then 1.3% dip means the people who are waiting for that big correction are going to end up paying more next year than they would this year. So that's one way to get them off the fence. And, you know, I just want to wish you all success, but I also want you all to stay healthy throughout this these trying times. So thank you.
Awesome. Fabulous. Thank you. George, Jane, I'm going to y'all sound like the Jetsons, George and Jane. I'm going to let you guys have some concluding remarks and finalize everything for us.
I would just like to say that, yes, I enjoy these Zoom meetings. At least you feel like you get to see a few of your friends, because we have definitely been grounded for 3 months. I basically am still supposed to be sheltering in place, but I have been getting out. Thank goodness most of the houses were vacant that I showed. I was glad about that. But it's wonderful to see everybody and to get all this good information. And I do hope that everyone stays well and safe. And hopefully this will be over soon, because this is the most trying thing I think probably any of us have ever been through. I know it is for me, and I'm so sorry to hear, Rich, that you have underlying health issues. I hope everything gets good. I hope your health improves. And we'll see what we're going to do in July for our meeting, whether it will be virtual or whether we will go back to the office.
Yep, we're just waiting to hear what Governor Kemp, if he's going to add any additional executive orders throughout the month. But
well, actually, I'm supposed to be grounded until July the 12th, and so that might cover our meeting, and it might not. You know, I mean, it would have this month, but anyway. We'll find that out later in the month. And thank you to everyone. Great to see you. You look wonderful, guys.
George, Ansong, any final comments?
Productive week, you know, but and thank everybody for coming on. Like everybody says, it's nice to see your faces, smiling faces. So just enjoy the week and be safe.
Awesome. Thank you, guys. And thank you, George and Jane. They are your team captains at the Powers Ferry branch of Maximum One Greater Atlanta. Thank you, Rich and Doug
Thank
from
you.
Shafritz and Dean, and thank you to John.Bohannon of
Yeah.
Movement Mortgage. Awesome.
Okay, thank you.
Dana.
Thanks, Dana.
Thank you. Bye-bye.
Thank you. Yes, ma'am.
Dana, did we lose John Zupanic? Because he called me at 10 o'clock and got the password. He was planning on speaking to us, but
I did not see him. These Zoom meetings don't have a password, so I'm not sure what happened. But.
well, no, it had a password. The one you sent me last week.
The password is just if you join by telephone, but not if you join by computer.
Oh, okay. Okay. Well, maybe he just plain old got lost. Have a wonderful week, everybody.
Bye, everybody. Thank you.
Thank you so much. Miss you guys.